Join me as I dive deep into the current insights on NKE stock and see if I can decode what's really going on right now. Nike, the iconic sports apparel brand, has been a household name for decades, and its stock has been a focal point for investors seeking growth and stability in the market. With a market capitalization of over $250 billion, Nike is one of the largest and most successful companies in the world, making its stock performance a critical indicator of the overall market's health. Nike is currently facing several challenges that could impact its stock performance. On the supply chain side, the company is dealing with production and shipping delays, which are affecting its ability to meet consumer demand. Additionally, the rise of competitors like Adidas and Under Armour is putting pressure on Nike to innovate and stay ahead of the curve. Furthermore, changing consumer behavior, such as the shift towards online shopping and sustainability, is forcing Nike to adapt its business model to stay relevant. Another significant challenge Nike is facing is the ongoing trade war between the US and China. As a company that relies heavily on international trade, Nike is vulnerable to tariffs and trade restrictions, which could increase its production costs and impact its bottom line. To make matters worse, the COVID-19 pandemic has disrupted global supply chains, making it even more challenging for Nike to operate efficiently. Despite these challenges, Nike has a proven track record of resilience and adaptability. The company has been investing heavily in digital transformation, which has enabled it to stay connected with its customers and drive sales through e-commerce channels. Nike has also been focusing on sustainability, launching new product lines made from recycled materials and reducing its carbon footprint. Market trends suggest that the athletic apparel industry is poised for continued growth, driven by increasing consumer interest in health and wellness. According to a recent report, the global athletic apparel market is expected to reach $248 billion by 2025, up from $184 billion in 2020. This growth is likely to benefit Nike, which is well positioned to capitalize on the trend. Nike's recent earnings reports have been strong, with revenue growth of 10% year-over-year in the most recent quarter. The company's gross margin has also expanded, driven by higher prices and lower costs. These positive trends have been reflected in Nike's stock price, which has risen by over 20% in the past year. Many experts believe that Nike's stock has further upside potential. A recent survey of analysts found that the average target price for Nike's stock is around $170, implying a potential gain of over 15% from current levels. This optimism is driven by Nike's strong brand, its ability to adapt to changing consumer trends, and its growing presence in the digital market. One critical insight that could impact NKE stock moving forward is the company's ability to navigate the ongoing supply chain disruption. If Nike can successfully mitigate the impact of production and shipping delays, it could lead to higher revenue and profit growth, which would likely drive the stock price higher. On the other hand, if the supply chain issues persist, it could put pressure on Nike's stock price. Another key metric that investors should watch is Nike's digital sales growth. As the company continues to invest in e-commerce and digital marketing, its ability to drive online sales will be critical to its overall growth strategy. If Nike can maintain its strong digital sales growth, it could lead to higher revenue and profitability, which would likely drive the stock price higher. One market expert has predicted that Nike's stock could reach $200 by the end of the year, driven by its strong brand, its ability to adapt to changing consumer trends, and its growing presence in the digital market. While this is just one opinion, it highlights the potential upside for Nike's stock and the confidence that many experts have in the company's ability to navigate the current challenges. In conclusion, Nike's stock is facing some significant challenges, but the company's strong brand, its ability to adapt to changing consumer trends, and its growing presence in the digital market make it an attractive investment opportunity. As we've discussed, the ongoing supply chain disruption, competition from rivals, and changing consumer behavior are all issues that Nike needs to address, but the company's track record suggests that it has the resilience and adaptability to overcome these challenges. What do you think about NKE stock? Do you think it has the potential to reach $200 by the end of the year? Let me know in the comments below, and don't forget to check out my other videos for more insights on stock market trends.